Welcome to the virtual lunch. Today is Wednesday, June 24th. This is the virtual lunch number 73. I'm very proud that my old friend Scott Mozarsky is on the line.
Yeah, when I met Ari, I was a cross-border M&A lawyer doing an awful lot with Japan and done outbound work. I speak Japanese, albeit with a Brooklyn accent and an Osaka accent. Went in the house. I was general counsel and the head of M&A for UBM PLC, which was a FTSE 100 group that was extremely acquisitive in transforming from a North American centric and print media centric group to a group that became the second largest live event organizer globally, built PR Newswire into a global powerhouse in the news distribution industry and various data and digital products. Moved to the business side, ran the bulk of PR Newswire and then the bulk of an organization called UBM Tech, which is best known for Information Week and Black Hat and a number of other technology B2B offerings. Then ultimately left UBM, went to Bloomberg, and where I got really involved with the legal market, other than having been a user of various legal technology solutions as outside counsel and also as a general counsel, was running Bloomberg's business across the legal market, which I did for a few years, and then left Bloomberg, ran North America for Van & Capital, one of the larger legal finance players, and I'm now heading up the legal and compliance, capital markets, and M&A advisory practice at JEGI, which is a middle market investment bank. Also, we're a bit of a merchant bank. We do ride along in some investments and make some investments. I'm on the board of Pro Bono Net, which Dave Heiner, I've had the privilege of partnering with him over the last year. There have been skeptics out there. I know somebody referenced the legal tech echo chamber and how much of it was real and wasn't real. The data clearly supports the fact that investment activity in the legal market was ramping at an accelerated pace, both early stage and growth stage. So startups, as well as companies that had kind of reached critical mass on revenue and profit and were ready to take that next step and really invest in strategic initiatives. And also that M&A activity was increasing significantly. But I think that the legal market's been overshadowed by fintech. And I think it's been overshadowed for a variety of reasons. Investors have woken up to that. They see a lot of similar patterns with fintech, and by virtue of that, they see a lot of opportunity. In 2020, yes, there's still been a lot of activity. Ona, Badhala, Logi, Verbit, Juro, Rain Court, they've all raised money this year. And Latera's done some acquisitions. Mitratech did an acquisition yesterday. So it's not like nothing has happened, right? And there's still a lot of interest in the market. When I shifted to what I'm currently doing, was a lot of inbounds from various investment sponsors, whether they focused on early stage or whether they focused on growth equity in the legal market, and affirmative statements that they wanted to be aggressive about acquiring assets in the legal market and investing in legal tech companies, not only because they felt that there was a need for capital, but also they felt they could add value to that market due to a lot of the similarities with reg tech and insurance tech and fintech and yada, yada, yada. It's too early for there to be a bunch of bargains in the market. And the reason is that, well, COVID's clearly impacting companies. And I think a lot of the earlier stage companies that don't have an awful lot of capital to draw down upon and are dealing with markets where it's taking longer to get people to make decisions are getting into a situation where they're under more and more pressure and therefore more likely to let people invest or acquire at better terms for the buy side. To a large extent, solid companies are still managing to make progress in the market. If they're subscription businesses, they're not necessarily being impacted around their P&Ls and B, their collections. I think, will there be bargains? Yes. I think there will be founder-owned companies that come out of this that thought that everything would just keep going up and multiples would keep rising and growth would just keep coming, kind of like people think the stock market will never go down. People will recognize that they don't have to hold out for the best deal. They don't have to worry about leaving a little bit of money on the table. And if they can get a fair, solid price for their business, they'll trade. On the investment side, I know of a couple of the processes where there was a retrade at the end in light of the crisis and where the valuation of the company did come down a bit. Legal and compliance are the ones where you're not seeing much of a discount. Will that change? I think a lot of it depends what happens with the broader economy. But so far, I'm not seeing a big impact on valuation. Abdi said I'm on his advisory board. I frankly am fascinated by Alta Claro, and I'm sure there'll be others, opportunity to disrupt a commoditized, sleepy world of CLE. And one of the other boards I'm on is a company called Theorem that some of you might know that kind of plays in the same space as Rain and Court. And I think ultimately the market will sustain 4 or 5 companies like that. There are 3 major problems that large law, mid-sized law, and their clients have. One is that they're subscribing to loads and loads of publications and platforms and other things and spending a lot of money. The second is because of the way workflow works, people where they have solutions that can be extremely useful to them aren't necessarily using them. And the third is a lack of single sign-on. And I think all these platforms can solve that. But Rain and Court has come into the market, and instead of speaking to the customer's problems, they've been very focused on kind of being the app store for legal, which sounds sexy. But in sales and in trying to build a relationship with your customer and really understand them and to get them to buy into what you're doing, it's speaking to things that will help people in their day-to-day and make them more effective in their jobs and for their clients. To me, that's the biggest thing I've learned in sales and marketing is understand your customers, understand the market, build a consultative relationship, and make sure you're talking to the right people. A lot of really good technology out there, some of which is actually available and being paid for by people's employers, but they're not necessarily using it. But e-discovery I wrestle with because I think the market will continue to grow, data will continue to grow, there's a lot of opportunities, but I also think that there's some real challenges in the market, right? I think there's commoditization, especially around the services piece. I think that in the technology side, relativity is great, Nuix is great. I don't know if anybody's doing anything terribly innovative other than building off of those platforms a bit. And I think that if Relativity One ultimately works, there's going to be a lot of pressure on hosting revenues and other things. Every day, I'm bumping into a really interesting early stage legal tech company that so long as that has a really good strategy and vision, and so long as it has the capital that allows it to execute, has a pretty good chance of being successful. And will there be failures? Of course there will be failures. So Lexshare is interesting in that it came into market with a lot of crowdfunding, and by virtue of that, it targeted smaller deals. And I think as it relates to legal investing, it's hard to form a large enough fund that a group would be going head to head with HG Capital and investing in Litera or Mitratech. However, on the earlier stage, where there's loads of opportunity, there's loads of companies trying to raise anywhere from $500,000 to $2 million. And frankly, they should be able to. And there's not a lot of players. Everybody's preoccupied with kind of growth equity and the larger deals. Other than what Zach's trying to do with the legal tech fund, and Alec will touch that, there isn't that much out there. We always said, if Google woke up one day or Microsoft woke up one day and said, we kind of want to go for it in the legal market, they could probably kill Lexis and Westlaw and Bloomberg around legal research, but it's not worth their time. Would you rather go into, Azure in the cloud market or try to focus exclusively on the legal market? Think about the different pockets, litigation support services. Then you look at online legal services, legal practice management, 35 different players in that market, all of them growing. Legal research market. Then you've got education, legal spend management, analytics, predictive analytics, and legal finance. So if you add up all of these parts, it's a pretty big market. I think, Jeff, that the market's bigger than we think. And I think people have woken up to that. And that's why I think we're seeing more and more private equity-backed platforms. There's at least 25 to 30 private equity-backed platforms sitting in the legal market right now. When I was at Bloomberg, somebody pointed out to me that one of the reasons that practical law did so well, that practical guidance became such a big deal was the last recession. Because law firms fired a bunch of senior associates and junior non-equity partners. So suddenly the mentors and the people that people would go to for advice and for guidance weren't there anymore. And practical guidance came along and filled that gap. So coming out of this crisis, we're working from home, the challenges that creates around culture, collaboration. I do think there are some areas that are well placed to grow. And when I mentor people, I say is just find ways to add value.
Scott Mozarsky, everybody.
Thank you, everyone.